Good day. This video presents the results of our study entitled, The Mediating Role of Profitability on the Relationship between Asset Tangibility and Firm Market Value of Publicly Listed Property Firms in the Philippines from 2014 to 2023. This research examines how tangible assets and profitability interact in shaping the market value of Philippine real estate firms over a 10-year period. Despite holding substantial tangible assets such as land and buildings, many Philippine real estate firms have faced declining investor confidence and heightened market volatility in recent years. Oversupply, weakening demand, slower cash inflows, and rising vacancy rates have increased financial pressure across the sector. These conditions raise an important question: how can property firms sustain or improve their market value during periods of uncertainty? This study examines whether profitability plays a crucial role in transforming tangible assets into sustained market value, strengthening financial resilience, and restoring investor confidence. This study is significant to several stakeholders. For property firms, it provides guidance on strategies to improve profitability and enhance market value through effective asset management. For investors, it offers insights into identifying firms with strong asset utilization and long-term investment potential. For educational institutions, it contributes academic material for courses in real estate finance, corporate valuation, and asset management. Finally, for future researchers, it serves as a foundation for further studies on firm value, profitability, and capital-intensive industries. Firm market value reflects the present value of a firm's expected future cash flows, adjusted for risk, and represents how the market perceives the worth of a company. In this study, firm market value is measured using Tobin's Q, which is the ratio of a firm's market value to the replacement cost of its assets. A Tobin's Q greater than 1 indicates that the market values the firm more than its asset base, while a value below 1 suggests undervaluation. Asset tangibility refers to the proportion of a firm's assets that are physical and measurable, such as land, buildings, and equipment, relative to total assets. This is measured using the fixed asset ratio, which indicates how much of a firm's resources are invested in long-term physical assets. A higher ratio reflects greater reliance on tangible assets, a characteristic common in the real estate industry. Profitability refers to a firm's ability to generate earnings relative to its resources and reflects its overall financial health. In this study, profitability is measured using return on assets, or ROA, which shows how efficiently a firm uses its total assets to generate income. ROA is especially important in capital-intensive industries, as it captures managerial efficiency in utilizing large asset bases. From 2014 to 2023, Tobin's Q trends among Philippine real estate firms reflected changing investor sentiment shaped by firm performance and macroeconomic conditions. Market valuations were strongest from 2014 to 2017, declined sharply during the COVID-19 pandemic, and gradually stabilized after 2021 at more conservative levels. While large diversified developers maintained relatively stable valuations, firms with strong profitability and efficient asset use recovered faster, highlighting Tobin's Q sensitivity to earnings performance and economic shocks. From 2014 to 2023, asset tangibility among Philippine property firms showed a clear upward trend, reflecting the sector's capital-intensive nature and strategic investment in long-term physical assets. While the period from 2014 to 2018 was relatively stable, the 2020 economic disruption caused significant spikes and divergence in firm-level asset structures. Despite these fluctuations, firms gradually increased their tangible asset base, highlighting a long-term commitment to capital accumulation, operational capacity, and efficient use of physical resources to support profitability. From 2014 to 2023, the profitability of Philippine property firms, measured by ROA, showed distinct phases. Between 2014 and 2018, firms experienced stable and positive returns, supported by strong demand and steady project activity. In 2019, profitability declined and became more uneven across firms, while the COVID-19 pandemic in 2020-2021 caused sharp fluctuations due to halted construction, mall closures, and delayed projects. By 2022-2023, profitability gradually normalized, with firms recovering at different rates depending on operational resilience, asset use efficiency, and strategic adaptation to market conditions. The regression results show that profitability had a statistically significant and positive effect on firm market value. This indicates that property firms that used their assets more efficiently were more highly valued by investors. In contrast, asset tangibility did not have a significant direct effect on market value, suggesting that investors prioritize income generation over the mere size of tangible asset holdings. The results further show that asset tangibility had a significant and positive effect on profitability. Firms with higher proportions of tangible assets tended to generate higher returns on assets. Although the effect size was modest, the findings highlight the importance of efficiently utilized tangible assets in improving earnings performance. Profitability was also found to have a statistically significant and positive effect on firm market value. Firms with higher ROA were more favorably valued by investors, as profitability signals efficient asset utilization, financial stability, and positive future performance expectations. Even with modest explanatory power, profitability remains a key driver of valuation. Finally, the diagram illustrates the mediation model tested in this study, showing how asset tangibility affects firm market value through profitability. The results indicate that tangible assets significantly enhance profitability, which in turn strongly increases market value, while the direct effect of asset tangibility on market value is not significant. This means that simply holding large physical assets does not automatically raise firm value. Rather, it is the efficient use of these assets to generate earnings that drives investor recognition. In other words, profitability serves as the key pathway linking tangible assets to market value, highlighting the importance of effective asset utilization in capital-intensive property firms. Based on the findings of this study, the following recommendations may guide property firms and stakeholders. Property firm management may focus on strategic diversification, efficient asset deployment, and liquidity management to maintain and potentially enhance market valuation. Firms may review and optimize tangible asset utilization strategies to ensure that fixed assets meaningfully contribute to revenue generation and operational efficiency. Management may implement adaptive business strategies, cost management practices, and operational optimization to sustain profitability. Property firm leadership may prioritize initiatives that enhance profitability through revenue diversification, effective asset use, and financial planning, emphasizing earnings performance over asset composition in investor decisions. Continuing with the recommendations, management and finance departments may strategically reinvest in productive tangible assets, maintain operational efficiency, and adopt strategic cost management practices, including expenditure monitoring, efficient budgeting, and rationalized capital spending, to support consistent profitability and strengthen long-term financial performance. Investors may monitor profitability indicators, particularly return on assets or ROA, and consider firms' financial policies and operational efficiency to guide investment decisions. Management may convert tangible asset holdings into sustainable earnings by ensuring operational efficiency, strong governance, and effective deployment, recognizing that profitability mediates the relationship between asset tangibility and firm market value. Future researchers, industry professionals, and policymakers may examine additional financial and market variables, such as leverage, liquidity, firm size, and growth opportunities, to provide a more comprehensive understanding of variations in firm market value beyond asset tangibility and profitability. This concludes our presentation. We hope that these findings and recommendations provide valuable insights for property firms, investors, and researchers alike. Thank you for listening.